Silver's abrupt decline that we experienced today, midday, is really telling. And what it shows us is that we had a $9 drop. That means if you were watching closely, you could have gotten in on that $9 drop. Now, what this shows us really is a structural shift in short-term technical positioning that cannot be dismissed as just ordinary fluctuation. It's not. A move from $8.90, basically $9 an ounce. I mean, it's about 9% in less than one trading cycle. In this live stream, I'm going to break down what happened, and we're going to look at the technical shift that we saw so you, as a silver stacker, can see when this is coming and really get a good grip as to how this pattern of silver works and have an idea, or a better idea at least, as to when it's coming again. If you're new to this live stream, let me know down below. Let me know where you're listening to in the comments. Tell me what time you're listening, because I post this live stream at 9 p.m. Eastern Time daily. My goal of this live stream is to break down the moves of the market of that day in plain English, simple language, so you as a silver stacker can understand the patterns of silver and really have a good sense of where this price is most likely headed to move. Let's get right into it. Now, when we have such a large directional movement that occurs after a prolonged advance, it forces immediate reevaluation, of course. We're reevaluating whether the prevailing trend remains intact or has entered into a transitional phase, or it makes us stop and think, is it possible that the psychological ceiling is so strong that it's just stopping people in their tracks? Now, the most immediate evidence of this shift appears in the daily candlestick that formed. A candlestick is simply the high and low of that moment. And really, what formed during the decline is telling, because silver printed a large bearish candle with a full body extending from near the session high toward the session low. That's long. That's tall, I should say. And what it's reflecting is sustained selling pressure rather than any momentary rejection. Now, listen closely to this, because when you can wrap your head around this part, it will really help you get a good sense as to where silver might be headed in the rest of this week. Because when we have large full body candles, that signals conviction. Unlike candles with long wicks, which reflect indecision, full body candles reflect directional agreement among investors, among major players. The absence of a significant lower wick really indicates that buyers did not step in aggressively during this decline. They didn't see this as a dip, and they didn't jump in to buy it. And that allowed the price to close nearer to the session's lowest level. So here's what this tells us. This single candle had disrupted the pattern of smaller body candles around it. And that was characterizing the advance that we saw this starting last Thursday, Friday. Everyone was excited over the weekend about this. Over the prior 2 weeks, silver had printed a sequence of higher highs and lower lows. Here's what that means for you and I. It's confirming that we have an upward trend, and we have integrity in that upward trend, meaning the price of silver is most likely to continue to increase higher and higher. That sequence has now been interrupted. And interruptions of this nature do not automatically terminate the trends, but they represent structural damage that must be repaired through subsequent behavior, right? Something has to change to keep this going higher and higher. Of course, we don't want anything lower and lower, but look at the turning point. Here's what we really have to see. One of the most important technical references is the 50-day moving average to try to give us an understanding of how this happened today. That's a $9 drop. Currently, we're positioned near $89.50 for the 50-day moving average. If you're new to this live stream, I host this live stream daily at 9 p.m. Eastern. Don't miss it. If you're new, hit subscribe so you don't miss it. My goal of this live stream every day is to break down the movement in silver of that day, the actions of the market in plain English, so you can understand and get a good sense of where silver is likely to head Look, silver's declined to $87 just briefly. It placed price below this intermediate trend line. Again, the 50-day moving average is about $89.50. So we're below this intermediate trend line, and that's representing the first decisive breach of this level in several weeks, really. Several weeks. That should make sense if you've been following this price of silver, because when we had this pullback from $120 down to about $68, some people call it a crash. It was really just a correction. Everyone's waiting to get up to this point again, to $95, $100 again. Now, the moving average tells us, and it represents really a consensus valuation across a defined time horizon, it's 50 days. And when price remains above that moving average, the trend is reinforced. It's a line, even though we're fluctuating, the line really is slowly going up. It might be a staircase, but it's going up. And when price falls below it, investors, particularly industry and large institutional players, they have to reevaluate whether the prior numbers, the prior price, the prior consensus is really valid anymore. That's all we're seeing. So here's the significant part that I want you to really keep top of mind. Really stick this in your head. The significance of this breach lies not only in the violation itself of breaking it, but it's in the speed which it occurred, 24 hours. Silver didn't gradually descend toward the moving average. It really just pierced abruptly. And abrupt breaches increase the importance of any subsequent candles. It makes everything very important. Because if price quickly recovers above that moving average, that breach that we experienced, it may be interpreted as just temporary. And that when we're trying to head to $100, we're trying to break that psychological ceiling of $100 in silver, then yes, you want a temporary drop. That's fine. That's fine. It could be profit taking. It could be many things. If price remains low, then the breach becomes confirmation of an actual trend transition. But when we're looking at the hourly chart, it really provides further clarity regarding how this decline really unfolded. Because silver formed a sequence of consecutive bearish hourly candles, and each were closing lower than the previous one. And this pattern reflects sustained directional agreement. But, this is really key, but the trends strengthen when candles close progressively lower, because each close establishes a new reference point. We're constantly getting reference points. Now, equally important to this is the failure of any prior resistance to actually convert into support for the price that we're looking for. Remember, before the decline, you nearly need to remember, before the decline, silver had established intermediate resistance near $94. That's why yesterday, Sunday, Saturday, everyone was so excited about how Monday would unfold until we got smacked in the face midday with this. It's been tested many times, this psychological level, this ceiling of $95. There's something about round numbers in the world of silver that really is a breaking point or a brick wall, really. If you're new to this live stream, hit subscribe first so you don't miss it. I post daily. I host this live stream daily on Pound of Gold, and my goal is to break down the market moves of the day, the silver market, in plain English, so you can understand what's going on, and you could look at these charts the way the rest of us look at these charts and analyze the technical aspect of it to really get a good sense of where silver might be headed. That's my goal, to just break it down in plain English. So if you're new to this, hit that subscribe button. I'm hosting this live stream daily to get this information to you. Now, once that resistance is broken, it typically becomes support. For example, I told you to explain this in plain English. Here's the best example of this. When we broke $50, that became support. Back when we finally broke that $50 psychological ceiling, which was, it seemed like it was there forever, finally broke it, that $50 becomes support now. Of course, it's no longer a ceiling. However, for today, silver's rapid decline carried price back below this level without sustained defense at all. And that's indicating that the prior breakout, maybe people were unwilling or on the fence to really go past that psychological ceiling that we're at. And presently, really, the psychological ceiling is closer to $95. Now, this failure has implications, of course, for the emerging cup and handle formation that we need as bullish silver stackers. We want this price of silver to break 95, break 100, break 105, break $110 an ounce, head up to $120 an ounce. That's what we're looking for. And a drop like we experienced today, $9 drop midday, it doesn't destroy the cup and handle. It doesn't. If you're new to looking at this analysis, that phrase cup and handle is the shape, the formation that we see on the chart that really sets up a bullish momentum for this price. Presently, we're in the handle portion. And that's great news because that is the bullish part of the cycle in silver. So this failure has implications for the emerging cup and handle formation that have been it's been developing over the past recent months. And the cup portion of the formation had formed through gradual recovery from prior lows, while the handle had developed as price moved sideways beneath the resistance. And that's what the handle always is. It's always a sideways move. That's the shape of a handle. It shouldn't be a shock, but we want to stay there. We don't want to go completely back. And it does, in a way, this is the hard or the struggle when we're analyzing these charts. The handle does represent hesitation. It allows investors who entered earlier to reassess their positions. But silver's drop to $87 has extended the handle downward beyond its prior boundaries. And this is what I really want you to lean in on. Don't miss this. Don't let this go past you. Again, that $87.90, it extended the handle down beyond its prior boundaries. And this extension doesn't invalidate the formation entirely. It doesn't mean the cup and handle's gone, but it could be a delay in the completion. And completion means we're really getting bullish, we're getting momentum, we're getting a surge. Now, cup and handle formations require stability during the handle phase. And the reason many are shocked at what happened today is because those numbers don't look stable. Particularly when we have the greatest part of the silver puzzle today, war in Iran. You would think that gold shooting up in price, which has been, that safe haven of gold, is showing its real power. It's showing what it does best. Gold is moving up in price. Silver, many thought silver would move too, but if you've really analyzed the history of silver, you're not too surprised that silver is not following gold immediately. Typically, what we see when gold gets a lot of movement that's clearly tied to geopolitical issues or anything going on that has no resolution, like a war in the Middle East, when we see gold respond to that, silver will respond, but it takes time. It could take 3 months for silver to respond to that. And there's many reasons for that, but one that we can really grasp onto today at the time of this live stream is that, if you're new to this live stream, please let me know in the comments. Drop me a comment. Tell me where you're listening from. Tell me what time you're listening to this. I host this at 9 p.m. Eastern on Pound of Gold daily, every day, 9 p.m. Eastern. My goal is to break down the day's actions in silver. We look at the silver market. I give you a technical analysis, and my goal is to explain it in plain English so everybody can understand, everybody can look at these charts and get a good sense of how we could see where silver might be headed in the coming days. That's my goal. So one reason we don't see a response in silver price so quickly to a geopolitical issue or a war going on globally is because any big move by an institutional player or investor in silver, it has a window until we see it in spot price. So if JP Morgan, huge player, JP Morgan moves a boatload of funds out of silver. They want to put it to a more risk-based asset. They move it out of silver. We don't see, that doesn't hit spot price immediately. It doesn't. There's a lag, there's a window, and it really literally could take 3 months. We see this because if you look at the history of silver, we've seen examples of this throughout the past few decades where a big player has moved and we didn't see the reaction to it or the evidence of it in the spot price until months later. So back to today, it really isn't a huge surprise that silver did not follow gold so quickly as we thought it would. Now, the 20-day moving average also is not entirely blown apart when we look at the numbers for today, because that $9 drop that we experienced midday, we're looking at an average. That's the whole point of an average. It's not going to throw off everything. Look, gold's strong upward response to the war in Iran contrasted with silver's muted or even declining price today. It reflects really fundamental differences in their monetary roles, because gold and silver have completely different roles within the market. Silver is a monetary metal and an industrial metal. Also, there's a difference in their demand consumption, right? Institutional positioning. Although both metals really are historically classified as precious metals, they operate under distinct structural conditions during a crisis like we're having in the Middle East. Here's what I want you to understand about how this could impact silver, this war in Iran. When you understand the divergence and the difference, this shows us that gold's role as a primary monetary refuge, meaning a safe haven, and silver's both dual identity, its hybrid identity, as a monetary and industrial metal, they're going to react differently. Gold responds immediately to geopolitical conflict. We see this often. I mean, please, gold even responds to issues in the U.S. Political arena, right? I mean, a new politician coming in, gold responds. So it's not really a big surprise that it turns into this monetary reserve asset so quickly. Really, and these are the numbers, approximately 75 to 80% of gold demand originates from either investment, from central bank reserves, wealth preservation, but definitely not industrial use. And this gives gold a direct relationship with global fear. Central banks are going to go in on gold when they feel like the globe is shaking in fright. And when geopolitical instability intensifies, like we have presently, military escalation, involvement in Iran, institutions, sovereign funds, investors, they pull from risk, they pull from any risk assets, and they go into the safe haven of gold, which really, if gold wasn't so out of our reach, meaning you and I, silver stackers, the safety of gold that really makes it more stable than silver. Because just historically, you look at how gold has responded, how strong it's been. Even the past 50 years, what was it, 1971 we got off the reserve. So the gold standard. So in a way, gold is not as volatile as silver, and it's more stable, but it's so out of reach presently. Most stackers are looking at 10 ounces of gold. The 10th ounce is the new 1 ounce, really. Because it's so out of reach. But gold's deep market is also different from silver. The gold market is estimated at over $13 trillion in total value. And that allows it to absorb large capital flows without any friction. And as a result, really, gold becomes the immediate destination, of course, for any of these issues that have no resolution in sight. Now, silver, of course, is 50, really closer to 60% of its demand is from industry. That's what's gotten to our price today. And this industrial dependence really alters its response to any geopolitical conflict. Unless, if Iran was a major silver producer, sure, we might have a quicker impact on price, but it's not. And war introduces uncertainty not only in financial markets, but also in economic production. So, again, if Iran had industry within the country that was creating solar, that was creating EVs, something like that, that industry, of course, would slow, and that would impact our silver price quicker. But it's not. None of those presently are involved in Iran. And because it's mainly a geopolitical... Silver closed at $93.66 an ounce on Friday, so everyone is staring at the spot price today because the market's behavior entering this morning signaled a shift that technical analysis has historically identified as a precursor to unstable directional movement. Unstable. In this live stream, my goal is to break down the movements of the silver market every day. I host this live stream at 9 p.m. Eastern. Don't miss it. Hit subscribe if you have not. Don't miss this live stream every day. Now, when a financial asset trades near the upper boundary of a prolonged upward trend while really maintaining only a narrow margin above its support levels, its intermediate support levels, the structure of the chart transitions really from expansion into vulnerability. Now, last week on the live stream here, we were talking a lot about expansion, and we were really looking in that direction. But now we're looking into vulnerability. This is a shock for everyone because we've all heard what's going on in the Middle East. When we have tension like that, and specifically unresolved tension, we often see a move into safe havens. We are seeing that with gold, but not so much with silver. Now, don't be surprised because gold often moves first and then silver follows, particularly in times of unresolved tension. So it is highly likely, viewing the history of this metals, gold and silver relating to each other, that silver will follow. This does not mean, really, that silver right now is going to fall immediately, nor does it mean the upward trend is ended. It does not. Instead, it means the balance between continuation and reversal becomes increasingly sensitive to incremental changes. And really what we're looking at is the issue of participation, the issue of price acceptance, these psychological ceilings that we've been battling against. Now, don't miss what this means. At the center of this, what this means is we have a transition. When we look at the 50-day moving average for silver, stood at $89.50, and now we're representing a closing price that is really over the prior 10 weeks. So moving averages really, in this scenario that we're experiencing this week, those moving averages function not as predictors. They don't. Everyone would like to think that. And at first glance, it seems like a 50-day moving average for the silver price will. My goal in this live stream is to explain the fundamentals of silver, of the silver market, of these charts that we look at, so everybody out there can understand this in plain English. That's my goal of this. So I'm going to try my best to explain this in plain English. We all want to think that moving averages function as predictors. We do. But really, it's a reflection of consensus. And there's a big difference there. There is. Don't miss this. When price remains above the moving average, it suggests that recent participants are willing to transact at higher levels. That's the most important part. They're willing. They're ready and they're willing. They're going to transact at higher levels. And when price approaches the moving average from above, the market begins testing whether those participants remain committed. And that's really what we're experiencing. Beyond the issue of safe haven, of a safe haven asset this week for what's going on globally. Now, this interaction creates the conditions for really decisive movement by participants who are interpreting the outcome. And when I say participants, I'm not talking about silver stackers. I'm not. We're talking about institutional players. We're talking about industry leaders who are really moving the silver price. It's not you and I. So really keep that top of mind. If you're new to this live stream, let me know where you're listening, where you are. Let me know what time you're listening to this live stream. It really helps me get a handle on whether I should continue to post at 9 p.m. Eastern. I like this time slot. But let me know what time you're listening and hit subscribe so you don't miss it. Now, silver's position relative to this moving average really reveals a narrowing margin between price and support, really narrowing. And that is what's introducing this fragility into the upward structure. The difference really of just $4 between closing price and a 50-day moving average, it may appear modest, but in present terms, and in percentage terms really, it represents approximately a little over 4% of the total price. So historically, when silver trades within 5% of that support level, that intermediate support, and when we're having elevated price periods in general, we see subsequent candles that often determine whether trend continuation remains really a viable point. And when I say candles, I'm talking about these charts that we look at for the silver price. The candle shows the low and the high of that moment. That's what I mean by candles. This proximity, it doesn't dictate direction, doesn't tell us, yes, silver is going to go here or it's going to go there. But what it does tell us, and this is really important, do not miss this. What it does is it amplifies the importance of the next sequence of trading sessions. And that means Tuesday, Wednesday, Thursday, Friday of this week. These are really key days. Another critical technical factor is the shape and really the sequence of these candlesticks that we're looking at recently. Because over the past 2 weeks, silver's produced alternately daily candles that are really, they're alternating. That's the best way I could explain it. They're alternating. We've got both upper and lower wicks, and that's reflecting increasing disagreement between buyers and sellers. When we hear that, we think silver stackers are not walking into a local coin shop or they are walking in and selling. That's not what's going on here. You and I as silver stackers, we are not moving this price of silver. These are institutional players that we're talking about. These are industry leaders making moves. Now, when both types really appear frequently within a short time, the chart reflects indecision rather than any dominance. And that's the indecision that I noted at the top of this live stream, because the daily trading range for silver, it really expanded from, it was like high $3 and about 80 cents. That was between highs and lows. We're talking the beginning when we're looking back at the 50-day moving average. And so that indicated that participants were testing these multiple price zones. And within single sessions, they're testing it. Now, here's the key, and this is really important. This expansion of a daily range, it really matters because it reflects uncertainty. That's where we're at right now, this uncertain phase. And narrow ranges reflect agreement, of course, because even if we're moving sideways in price, there's agreement there. That's not what we're experiencing, because wide ranges reflect negotiation. And when negotiation intensifies, especially near these elevated price levels, trying to push to $95 an ounce to $100 an ounce to $105 an ounce, we're trying to get up there, the probability of any resolution, of directional resolution, of a solid increase really starts to be tight. Now, this process becomes really clear when we look at it through the framework of the progression in silver price. And the best way to do that is not to take out your crystal ball. The best way to do that is to look at the history of this price and look at the patterns that we see in silver. That's my goal of this live stream, is to show you how we analyze these charts, how we understand the pattern of silver, and therefore have a good idea, a good sense of where this price, the spot price that you and I as silver stackers that we're staring at constantly, where it's most likely to go. So when we had an ascent, silver's ascent from below $50 an ounce, right, back in early 2024 to above 90 today, that represents an advance that's exceeding 80% over approximately 24 months. 80%, it's just huge. Now, that's sustained at the same time. It's not just one sharp shoot. And when we have sustained advances of this magnitude, it rarely proceeds uninterrupted. We have corrections. That's people are calling it a crash. When we dropped from $120 an ounce down to $68, $70 an ounce, people are calling that a crash, but really it's a correction. That's a correction. And we are still now, in a minute, I'm going to explain to you and show you what we're seeing on the chart that is really positive news for this silver price. What we're seeing. So watch this carefully because this is really important. This volume of the pattern really reinforces my interpretation here. We have average daily trading volume that increased to approximately 210 million ounces. 210. And that's just last month. And that's reflecting elevated participation really relative to what we've seen historically. We have increased participation. We have more players in this market near these elevated price levels. That can indicate either accumulation or distribution. And when we break this market down, when we look at these charts, this technical analysis, really it distinguishes between these outcomes of by examining price response, yes, but at the same time, if we have increased participation, it produces higher closing prices. And we've been seeing that over the past 50 days. If those increases produce any stalled or declined closing prices, then the opposite becomes more likely. If you're new to this live stream, hit that subscribe button. I break down the silver market daily. I host this live stream at 9 p.m. Eastern every day. My goal is to explain how the patterns of silver are shown in these charts and how we can understand or get a good sense of where this price is most likely to head. That's my goal of these live streams. So don't miss out. And please leave me a comment. Let me know where you are and what time you're listening. Let me know that. So silver's recent candles show closing prices that have struggled to extend significantly beyond the prior highs. That's where we've been struggling. This doesn't confirm that silver's dead. It does not. But it introduces the possibility that earlier participants are reassessing their positions. And really, it can be argued that that was the greatest force and the greatest source of the correction we saw when silver dropped from $120 an ounce way down to the $70 range. It's profit taking. That's all it is. Major players had their limit. They felt like silver was headed into a bubble, and they decided, okay, we're pulling out. We're taking our profits at this point. So, of course, these huge players make their moves. You're going to see silver drop. It's not like you and I cashing out a monster box of silver, and all of a sudden the spot price is going to move. It's not how this market works. Now, when we have these support levels, watch this carefully because this really explains a lot. When we have these support levels that are providing additional insight, silver really established its intermediate support near $88 an ounce. And that was about 2 weeks ago, where we had prior declines were encountered with renewed buying interest. And so that was a support level. It was about $88. And support levels represent areas where participants previously agreed on that value. That's kind of their ceiling. And when price revisits these areas, participants, when I say participants, I'm talking about these like major players that are moving the price, they reevaluate their willingness to transact. If price holds above that support level, then the trend remains intact. But if price falls below and fails to recover, then we're seeing weakness. But good news for you and I as silver stackers, we're not seeing that. In fact, resistance levels are functioning, they do function similarly, and they're functioning in that way for us because silver encountered resistance near $96 during recent sessions, $96. So the momentum is there. But, and this is really important, this is the turning point. Watch this. Where upward momentum starts to slow, that's when we see that this resistance, it reflects areas where it's more a psychological level than an issue of demand. And anyone following the price of silver over the past 4 years, 5 years, now running on 6 years, will tell you the momentum we're getting is from the supply of silver nowhere meeting the demand of silver. In any product where you have an increasing demand and a finite supply, any product in any market, that value of that product is going to increase. And we're going for the 6th year running. So no matter how many times these major players, and this is my opinion stating this is my opinion, no matter how many times these major players are taking their profits, like we experienced at the $120 level, we're not going to drop down back to the days of $30 an ounce, $40 an ounce, $50 an ounce. It's just my opinion. I'm not a financial advisor. It's my experience of looking at silver. Because my reasoning is that the industrial demand is increasing. Solar, EVs, AI, all of that requires silver. And that demand is just going up and up. So good news for you and I as stackers, we have that momentum just built in lately. If you're new to this live stream, I host this live stream daily at 9 p.m. Leave me a comment down below. Let me know where you are, what time you're listening. I like the 9 p.m. slot. If everybody's listening at a different time, I might change the time slot. But let me know what time you're listening, and hit subscribe, because my goal is to break down the silver market and read these charts and explain to you how these charts help us understand where the price of silver is headed. That's my goal for these live streams. Every day I'm doing this. Every day I break down the day's moves in silver. Hit subscribe, don't miss it. Now, momentum indicators also illustrate this whole idea of the difference between supply and demand. And the relative strength index, which is a measure of recent price changing and the magnitude of it, that registered readings near 61. And that was just, I believe, last week that we were near there. And that's below the overbought threshold of 70. The term overbought is when traders and institutional buyers are starting to feel like we have a bubble. People often refer to gold lately as overbought because the price is just, unbelievable. Now, this reading indicates that, yes, upward momentum remained present, but it was no longer accelerating. And momentum does not dictate price. It doesn't, but it reveals the intensity of the eagerness of buyers moving this price. So when we have trend continuation, we have long-term moving averages, that provides really additional context, because the 200-day moving average stood near $74 an ounce. That's a 200-day. We've been talking a lot about the 50-day moving average. If you missed yesterday's live stream, check it out. This past weekend, we were talking a lot about the 50-day moving average. But if you look at the 200-day moving average, that stood near $74 an ounce. And that really reflects the average closing price over approximately 9 months. 9 months, $74. That's a very exciting price. If you've been following the price of silver, even 2 years ago, we could never say that. No way. 9-month period, 200-day moving average at $74, nowhere close. So no matter how much we're fluctuating today at the time of this recording, the 200-day moving average is still very exciting. Now, silver's position really significantly above this level. What it does is it confirms that the long-term trend remained upward. But trends evolve across multiple time frames. We see this across every chart. And short-term trends can weaken while long-term trends will remain intact. That's why this is such a long game, this endeavor of stacking silver. It's not a quick ROI. The average true range, and this is a measure of daily price fluctuation magnitude, that increased to almost $3 just last week. And that's reflecting expanding daily movement to go up to almost $3. Expansion of this measure indicates for us that we have an increased disagreement between the movers and shakers of this market. And when disagreement intensifies near these elevated price peaks that we're looking at the past week, that tells us that we don't have any resolution. And resolution is, or non-resolution, I should say, is great for the silver price, because silver thrives when there's no resolution. Silver thrives when there's no resolution. Greatest example is the use of silver as a safe haven. When there's any issue going on globally, geopolitically, global issues like we're seeing in the Middle East, tariff issues, inflation, all of these serious issues that have no resolution in sight, that's where silver thrives. If you're new to this live stream, hit that subscribe button. Don't miss it. I host this live stream daily on Pound of Gold at 9 p.m. Eastern every day. My goal is to break down the silver market of that day, explain it to you in regular language so everybody can understand how we look at these charts, how we use these charts to get an idea of where silver might be headed. So hit that subscribe button and don't miss the next live stream.